Hello everyone, we are live from Chicago. Today is Monday, April 7th. I'm Charles Brown, Portfolio Manager with CB3 Financial, and yes, this is a special edition of CB3 Live. I will be with you this Thursday night for a regular program, and I sent a podcast just this morning, but with this historic day, I thought I would just drop in for a few minutes and comment on that. First off, you're going to be fine. If you looked at the end of the day, you might say, oh, well, just another down day. But if you didn't look at the inside hour of the day, you would have missed a lot of action. This was actually an historic day. This was the most volatile 90-minute period in the history of the stock market, from 8:30 when the market opened Central Time to about 9:45, so maybe 75 minutes. Just astounding volatility up and down. So the Dow fell by 900 points. The NASDAQ fell by more than that after opening last night at 5 p.m. Central Time, down almost 1,000 points. But this rocketing back and forth is what makes it so stomach-churning, especially for a portfolio manager, to try to make decisions on what to keep and what to dump in your portfolio. So today we did make quite a few changes, as we did Friday, as we did Thursday. Actually, Thursday and Friday set a volume record and I guess a volatility record for 2 days. But today's record was for 75 to 90 minutes. More so than the stock market crash of 1929, 1987, 2008, COVID. So just crazy volatility because of this uncertainty with the Trump tariffs. At one point, there was a rumor put out, acknowledged by one of the news agencies, that Trump had decided to postpone for 90 days all the tariffs, and the markets rocketed higher. Well, within 5 or 8 minutes, the White House came out and said, no, that's absolutely fake news, and the markets dropped again. And I don't mean to laugh. It's just histrionic behavior on the part of the market. The market is the most important leading economic indicator, and it waits for nobody. Nobody. It reacts immediately to things going on in the market. So the first thing I want to let you know is as we entered the trading day, and I've got the stats here, the market was down 13.73. This is the S&P 500 for the year. CG down 10.3. GI down 4.9. So we are handily beating the market. Now, you might say, well, I'm still losing money. And this happens every time we go into a downturn. Someone says, you talk about you're beating the S&P, but I'm still losing money. So investing in the stock market, if you are long stocks, which is what the vast majority of people are, they don't trade long short like some of us do in their side accounts, but they're investing and buying into the market, bonds, stocks, ETFs, etc., with the anticipation and certainly hope that those are going to go higher and that they can make a good return on them. But that doesn't always work that way, all right? So those times when the market is extremely volatile like this, things will go down. And what we are trying to always do is make more money for you when the market is going up. And if you go back and listen to the January or February editions of CB3 Live, I report our performance there, and we are beating the market on the upside. As it stands right now, I don't have today's data yet because we're still trying to reconcile trades. There was so much that happened. But as of this morning or last night, we were beating the market on the downside in CG and GI. If you're in DS, you've experienced this volatility in 2020 and certainly over the last couple years here, even in 2022. So DS is a very volatile program. It always stays in the market. We never move to cash there. Because today, for instance, when the market rocketed back after that news agency purported to say that, yeah, the tariffs are going to be paused for 90 days, the NASDAQ went from down 800 points to up 600. Again, this intraday volatility has never been seen before, not during any of the crashes, the 2008, the COVID crash of 2020, which is 5 years and a month ago now. This was a unique day. So what I'm trying to tell you with that is you survived those previous downturns. Well, you might not have been here in 1929 or 87, but you certainly were, many of you or most of you were in 08, 09 and 2020. You're going to survive this. Barely today, barely the S&P 500 did trade into bear market territory. Bear market territory for just a few minutes and then traveled out of that. The NASDAQ has been in bear market territory, so there is some conflagration there between the markets. The NASDAQ doing much worse than the S&P, and the Dow not doing quite as bad as the S&P is doing either. So the three markets there are sort of juxtaposed around seeing who's going to be right. Either this is overdone and the NASDAQ's going to move back to the upside, or the Dow is correct and it's going to travel down and join bear market territory with the NASDAQ. So we don't know that yet, but I just wanted to let you know, mainly just give you a few minutes here of encouragement. I don't know if anybody's online. I didn't give you any warning on this, so most of you will be watching this after I get through with it. But this is just to let you know, on Thursday night show, so just 3 nights from now, we'll have our regular monthly show and talk about the impact of these tariffs and the negotiating tool that it is. So just to give you a little bit of background here, Ronald Reagan, where are my notes here? Ronald Reagan actually implemented tariffs during his tenure against Japan, and it was a 10% tariff on semiconductors. We began that tariff period, and we thought that would be 6 to 8 to 12 months, maybe. It was 5 years. But the U.S. production of semiconductors increased from 10% of world supply to 20%. And guess who led the charge? No, it was not NVIDIA, not during Ronald Reagan's time in office. It was Intel, okay, ticker symbol INTC. So there is definitely precedent for long-lasting tariffs. In this case, what is likely going to happen is, and you're seeing literally every hour, the scene changes with this. You will probably see, even before Thursday night, many countries trying to get on the agenda for Mr. Trump to sit down and say, hey, we really want to trade with you, so what can we do to make this right? Well, what Mr. Trump is going to say is, President Trump is going to say is, you've been taking advantage of us for decades, not months, not years, decades. And this is coming to an end. We have the upper hand because we are the biggest consuming economy in the world and have been for decades. This is since World War II. And no other president since Truman has had the courage to do what Mr. Trump is doing. Now, you may say it's complete folly to think that we can actually have this kind of leverage. We're going to find out. Mr. Trump is willing to make this gambit to see if he can put the United States in a better position to have zero tariffs. Vietnam already has expressed the desire to have zero tariffs. Just today, Bibi Netanyahu was meeting with Trump. It was televised here, and the first words out of his mouth after, thank you, Mr. President, for welcoming me back for a second time. You've only been in office less than 100 days. We intend to have zero tariffs. What that means is perfect free trade. And that should be what we all want. We want to be able to sell our products overseas at will, and they can sell their products here at will. No tariffs necessary because the consumers in each country decide what they want to buy and from where they want to buy it. That's the way it should be. So that's really what I have for you. We are at a maximum. This is according to Treasury Secretary Hassan. We are at a maximum tariff with all these nations as long as they don't reciprocate. So that might sound kind of like bullying, and it is. We're going to levy a tariff of 40% on a given country. As long as you don't retaliate, you're going to pay that money. If you retaliate, we're going to double that to 75 or 80%. And we'll just keep going higher and higher and higher to the point where you can't ship anything here. And whatever you have on a boat, you're going to have it turn around and go back to your country because we won't let it dock in America. And how can we do that? Because we have an economy, a GDP, a gross domestic product that does not require exports for our survival. We certainly want to export to the rest of the world, but 21 to 22% of our GDP is from our exports, i.e. importing from other countries. They're importing from us, our exports. Take a country like China, and it's more like 65 to 68% of their economy is dependent on exporting. Why is that? Because their own people live at such a low quality of standard of life that they can't buy the products that are being made there by Apple and Intel and hundreds of other companies. So this is the leverage that Mr. Trump has. And there's no way to get to where we've gotten these last 3 days, really the last 2 weeks, but the last 3 days, Thursday and Friday of last week and then today, there's no way to get here without this kind of massive disruption in the entire economic trade fabric of the world. It was just necessary. So that's really why I'm here to tell you this today. Listen to my podcast from over the weekend. There's details there. Definitely don't miss the show Thursday night because then you can ask me questions, all right? I'm going to maybe do more of these impromptu tune-ins. You can see I don't have my usual stage set here. I'm just in my office at the end of a trading day, worn out. I hope my voice isn't too raspy. I hope you've understood what I've said. I hope you've been encouraged by what I've said because we're watching out for you guys all the time. I tell you that, but I mean it. So my ability to react to what is going on is far more important than my ability to predict. No one thought that when they woke up today, they were going to see the most volatile 90 or 75 minute period in market history. If they had and been prepared for it, it wouldn't have been volatile. Why? Because when the market expects something and then there's news that radically changes it, that's when the market freaks out and becomes what I call histrionic. That happened today. My ability to react to that, adjust your portfolios so that they in a downturn, lose the least amount possible, and then position us for a recovery so we can outperform the market on the upside. That's what we do here for you in this office every single day. All right. God bless you guys. I will see you Thursday night. Thanks for listening.